Hey there. Ready to dive deep into carbon markets? We're going to figure out what they are, how they work, and why they even matter. So you can drop some knowledge bombs at your next dinner party.
And maybe even spark some lively debate. Yeah, carbon markets are a hot topic, full of potential, but also their fair share of controversies.
Right. That's what makes this so interesting. It's not just about
Yeah.
definitions. It's about understanding a system, trying to tackle climate change with, well, market forces.
Mm.
So first things first, what are carbon markets? And how do they actually, work?
Okay, so imagine this, we're putting a price tag on pollution. Companies and even countries, they get a limit on how much carbon dioxide they can emit. It's like giving them a set number of, pollution permit.
Okay, so those permits are the key.
Exactly. These permits, they're also known as carbon credits, and they can be traded. So companies that can reduce their emissions below their limit, they can sell their extra credits to those who are struggling to meet their targets.
So it's like a reward system for being green. The less you pollute, the more you can potentially profit.
Yeah, that's the basic idea. By creating that financial incentive, carbon markets aim to accelerate the shift towards cleaner technologies and practices. It's all about making it more expensive to pollute and more profitable to be, sustainable.
Got it. But isn't there a risk that companies might just buy their way out of actually reducing their emissions? It feels a little like, I don't know, like cheating the system, doesn't it?
That's a valid concern, and it brings us to a crucial distinction. Compliance markets versus voluntary markets.
Okay.
In compliance markets, which are government regulated, these permits are mandatory. Think of it like a cap and trade system where companies exceeding their emission limits face penalties.
So those are the rule followers? What
Right.
about the voluntary markets?
Voluntary markets are, well, a bit different. Here, businesses and individuals choose to offset their emissions even if they aren't legally required to. They might be driven by genuine sustainability goals, or maybe a desire to enhance their brand image, or maybe a combination of both.
Okay, I think I'm starting to see the bigger picture here. But you mentioned carbon offsets earlier. Are those the same thing as carbon credits?
That's where it can get a little tricky. While both are used in carbon markets, they're not interchangeable. A carbon credit is a permit representing the right to emit 1 metric ton of CO2, or its equivalent in other greenhouse gases.
Okay.
It's digitally tracked and recorded in a registry. Think of it as a unit of emission.
So it's not a physical thing you can hold in your hand, more like a digital record.
Precisely. A carbon offset, on the other hand, is an action taken to compensate for emissions you're responsible for. This could involve investing in projects that reduce emissions elsewhere, like planting trees or funding renewable energy development.
Ah, so it's like balancing the scales. I emit a ton of CO2 here, but a tree gets planted somewhere else to soak it up.
Exactly. But here's where things get really interesting. How do we know that these carbon offsets are actually doing what they claim? How can we be sure that a tree planted to offset emissions is actually growing and, absorbing carbon?
Right, because planting a tree and then forgetting about it doesn't really solve the problem, does it?
Yeah.
That brings us to the question of verification, right? How do we ensure that these projects are legit and not just like greenwashing schemes?
You hit the nail on the head. That's where carbon standards come in.
Okay.
These are independent organizations that set criteria for carbon offset projects, verifying their emissions reductions and ensuring they meet rigorous environmental and social safeguards.
So these standards act as a kind of quality control for the carbon market, making sure everyone is playing by the rules.
Precisely. And there are several major players in this space. The Verified Carbon Standard, um, often considered the gold standard, it sets a high bar for project quality and emissions verification.
Is that where the term gold standard comes from in this context?
It is, and it's not just about emissions reductions, it's about ensuring these projects contribute to sustainable development goals.
So it's about making sure these projects benefit communities and ecosystems, not just offsetting emissions on paper.
Exactly. Then you have organizations like the Gold Standard, which focuses on projects that not only reduce emissions, but also deliver social and economic benefits to local communities. For example, a Gold Standard certified reforestation project. It might involve planting trees that provide both carbon sequestration and sustainable timber resources for a local village.
Now that's what I call a win-win, creating a positive impact on the environment and empowering communities at the same time.
And let's not forget, the players focus specifically on the U.S. market, the Climate Action Reserve and the American Carbon Registry.
Right.
These organizations play a vital role in ensuring the integrity of carbon offset projects within the United States.
Okay, so we've got these different standards acting as referees in the carbon market and making sure everyone is playing fair. But how does a carbon credit actually go from being, well, an idea for a project to something that's traded and used to offset emissions? It sounds like there's a whole life cycle involved.
There is. It's a fascinating journey that starts with a project developer coming up with an idea for a project that will either reduce or remove greenhouse gas emissions.
So it could be anything from building a wind farm to restoring a degraded forest.
Exactly. Once the project is conceived, it goes through a rigorous validation and verification process. Independent auditors, guided by the chosen carbon standard, they carefully scrutinize the project design, methodology, and projected emissions reductions.
So it's not enough to just say, hey, we're planting trees, give us some carbon credits. There's a whole process of proving that those trees are actually going to make a difference.
Absolutely. This validation and verification stage is, well, it's critical for ensuring the integrity of the carbon market.
Right.
Once the project passes muster, it's issued carbon credits, each representing 1 metric ton of CO2 equivalent reduced or removed.
So that's when the carbon credits are officially born, ready to be traded on the market. It's almost like they're getting their birth certificates.
A great analogy. Once issued, these credits can be bought and sold by companies and individuals looking to offset their own emissions. It's like a stock market for pollution permits.
Okay, so we've got project development, validation, issuance, and trading. What happens next? Do the credits just keep circulating forever?
Nope. They have a finite lifespan. Eventually, when a company or individual wants to offset their emissions, they purchase carbon credits and retire them.
Retirement for a carbon credit. What does that even mean?
It means that once a credit is retired, it can never be used again. It's permanently removed from the market, ensuring that the emissions reduction it represents is only counted once.
So it's like a one-time use coupon for offsetting emissions. You can't just keep reusing the same credit over and over again.
Exactly. This retirement process is crucial for ensuring the environmental integrity of carbon markets. It prevents double counting and ensures that each ton of CO2 reduction or removal is accurately accounted for.
That makes sense. So this whole life cycle of a carbon credit, from project development to retirement, is designed to ensure that these markets actually deliver on their promise of reducing emissions.
Precisely. It's a complex system with multiple layers of checks and balances designed to ensure transparency, accountability, and real environmental impact.
Okay, so we've covered a lot of ground here. We've explored the basic mechanics of carbon markets, the distinction between carbon credits and offsets, the role of carbon standards, and the life cycle of a carbon credit. It's fascinating how these markets try to harness market forces to tackle climate change. But I have to admit I still have some questions.
And that's a good thing. Critical thinking is essential when it comes to, complex issues like climate change and market-based solutions.
I'm particularly curious about the potential downsides and criticisms of carbon markets. I mean, are they really a silver bullet for climate change? Or are they just a way for companies to avoid making real changes?
That's an excellent question, and it's one we'll dive into in more detail in the next part of our deep dive.
Okay, now I'm really intrigued. All right, we're back, ready to tackle the tougher questions surrounding carbon markets. The criticisms, the potential downsides that folks are concerned about.
Yeah, of course. No system is perfect, and carbon markets are certainly no exception. One of the, I guess, most common criticisms is the risk of greenwashing.
Greenwashing. That's where companies try to appear more environmentally friendly than they actually are, right? But how does that play out in the world of carbon markets?
So imagine a company with a massive carbon footprint, let's say a fossil fuel producer. Instead of making substantial changes to reduce their own emissions, they simply buy a bunch of carbon offsets from a tree planting project somewhere else.
So they're essentially trying to buy their way out of responsibility. It's like saying, hey, we can keep polluting as long as someone else plants enough trees to make up for it.
Precisely. And that's why the integrity of those carbon standards is so crucial. If those standards aren't, rigorous, it creates loopholes for companies to engage in this kind of greenwashing.
So it's not enough to just have carbon markets. We need strong standards to ensure that they're actually delivering, real emissions reductions.
What are some other concerns people have raised about these markets?
Well, another criticism is that putting a price on carbon could actually hinder the transition to cleaner technologies.
Wait, really? How could that be? I thought the whole point was to make it more expensive to pollute and therefore incentivize clean alternatives.
Yeah, that's the theory. But some argue that it could create, perverse incentives. Think about it. If a company can simply buy carbon offsets instead of investing in, like, expensive upgrades to reduce their own emissions, they might choose the cheaper and, well, easier option. So it's like taking a shortcut instead of addressing the root cause of the problem. I see your point. Are there any other potential pitfalls we should be aware of?
There's also the issue of additionality.
Okay.
It's a complex concept, but essentially it boils down to this. How can we be sure that a carbon offset project wouldn't have happened anyway, even without the, carbon market?
That's a good question. If a project was already going to happen, then it's not really adding any additional benefit to the environment, right?
Exactly. Proving additionality can be tricky, and it requires a careful analysis of the project's financial viability and the motivations of the developers.
Okay, so there are definitely some valid concerns about carbon markets, but aren't there also some exciting developments happening in this space? I've heard about things like blockchain technology being used to track carbon credits.
You're right. Despite the challenges, the world of carbon markets is constantly evolving. The integration of blockchain technology is a great example. It has the potential to revolutionize how we track and manage carbon credits.
Blockchain, that's the technology behind cryptocurrencies, right? How does that apply to carbon markets?
So think about it. Blockchain is essentially a decentralized and immutable ledger.
Okay.
This makes it, well, perfect for tracking carbon credits, ensuring transparency and reducing the risk of fraud and double counting.
So it's like a digital chain of custody for carbon credits,
Yeah.
making it much harder to manipulate the system.
Precisely. And that's just one example. We're also seeing a growing interest in nature-based solutions, like reforestation and regenerative agriculture, as a way to generate carbon offsets.
That's exciting. It's not just about technology. It's about harnessing the power of nature to, combat climate change. Do you have any, personal favorites in this space?
I'm particularly intrigued by projects that focus on restoring degraded ecosystems. For example, there are initiatives using carbon finance to restore peatlands, which are incredibly effective carbon sinks.
Peatlands, those are like wetlands, right?
Yeah.
What's so special about them in terms of carbon storage?
Peatlands are amazing. They cover a relatively small portion of the Earth's surface, but they store, get this, twice as much carbon as all the world's forests combined.
Wow, that's incredible. So restoring these degraded peatlands could have a significant impact on reducing atmospheric carbon dioxide.
Exactly. And these projects often provide a range of other benefits like improved water quality, enhanced biodiversity, and support for local communities.
Okay, so it's clear that carbon markets are a dynamic and evolving space with both challenges and opportunities.
Yeah.
But I'm still trying to wrap my head around what this all means for me. As an individual trying to make sense of the climate crisis.
Yeah.
How do these markets fit into the bigger picture of, climate action?
That's a great question, and it gets to the heart of the debate surrounding carbon markets. Are they a powerful tool for driving emissions reductions, or are they a distraction from, more fundamental solutions?
Right, because ultimately it's not just about offsetting our emissions. It's about transforming our relationship with the planet.
Right.
Right.
Absolutely. And that's why it's so important to approach carbon markets with a critical and informed perspective. We need to be aware of the potential pitfalls, such as greenwashing and the risk of, perverse incentives.
But we should also be open to the possibilities, like the use of blockchain technology and the potential of nature-based solutions.
Exactly. It's all about finding a balance, right? We need to be realistic about the limitations of carbon markets while also recognizing their potential to contribute to a, broader set of climate solutions.
It sounds like there's no easy answer, no silver bullet. It's about engaging with these issues, understanding the complexities, and pushing for transparency and accountability.
Precisely. And that's what makes this such a fascinating and important topic to explore. It's not about blind faith in market mechanisms. It's about critically evaluating their role in addressing the climate crisis and demanding that they deliver, real, measurable results.
Okay, I'm feeling a lot more informed about the nuances of carbon markets, but I'm still wrestling with the big question. Are they a net positive or net negative for the fight against climate change? What are your thoughts?
That's a question that's still being debated, and it's one that we'll delve into even deeper in the next part of our deep dive.
Okay, this is getting good.
Okay.
All right, we're back. For the final part of our carbon market deep dive, we've covered a lot from the basics to the criticisms and those, the exciting innovations happening in this space. But the big question still lingers, right? What does the future hold for carbon markets?
That's the million-dollar question, isn't it? Are they going to be a key driver of a sustainable future, or will they fall short of their promise?
Right, because ultimately we're not just talking about financial instruments here, right? We're talking about the fate of the planet.
Exactly. And that's why it's so important to consider the broader context. Carbon markets can't exist in a vacuum. They need to be part of a comprehensive strategy to address, climate change.
So what does that look like? What else needs to be happening alongside these markets to ensure we're actually making progress?
Well, for starters, we need strong government policies. Carbon markets can be a valuable tool, but they can't replace regulations and incentives that drive emissions reductions across all sectors of the economy.
Makes sense. It's like having a speed limit on a highway. A carbon market might encourage some drivers to slow down, but you still need the law to enforce it and keep everyone, accountable.
A perfect analogy. We also need to invest heavily in research and development of clean technologies. Carbon markets can help stimulate demand for these technologies, but we need to push the boundaries of innovation and make them more affordable and accessible.
So it's about creating a virtuous cycle. Carbon markets driving demand, innovation lowering costs, and cleaner technologies becoming the norm. What else is crucial for the future of these markets?
Transparency and accountability are, paramount. We need robust monitoring and verification systems to ensure that carbon credits and offsets represent genuine emissions reductions.
Because otherwise it just becomes a shell game, right? Companies could be claiming to offset their emissions without actually making a real difference.
Exactly. We need to be able to track these credits from their origin to their retirement, making sure there's no double counting or shady dealings along the way.
It sounds like blockchain technology could play a big role here, right? Providing that immutable record of transactions.
Absolutely. Blockchain has the potential to revolutionize transparency in carbon markets,
Yeah.
making it much harder uh, to manipulate the system. It's like having a digital detective tracking every carbon credit, ensuring it's, used legitimately.
Okay, I'm starting to see how these pieces fit together. Strong policies, technological innovation, transparency, and accountability. It's not just about carbon markets themselves. It's about creating an ecosystem where they can thrive and actually contribute to a sustainable future. What about the role of individuals in all of this? What can we do to make a difference?
Well, as consumers, we have a lot of power. We can choose to support companies that are taking, meaningful action to reduce their emissions, and we can demand transparency from those that claim to be carbon neutral.
So it's about doing our research, understanding the claims companies are making, and, well, voting with our wallets,
Precisely. We can also reduce our own carbon footprints by, making choices that minimize our impact on the environment.
like driving less,
Yeah,
using energy-efficient appliances, and eating less meat.
exactly. Every little bit helps.
Hmm.
And we can also advocate for policies that support climate action, both locally and globally.
Okay, so it's a multi-pronged approach. We need governments, businesses, and individuals all working together to tackle this challenge. But let's circle back to carbon markets. As we wrap up this deep dive, I'm still wrestling with the big question. Are they a net positive or a net negative for the planet?
That's a question that sparks a lot of debate. There's no, easy answer. It depends on how these markets are designed, implemented, and regulated.
So it's not about blindly embracing or rejecting carbon markets. It's about being informed, critical, and engaged in shaping their evolution.
Exactly, and it's about recognizing that they're just one tool in the toolbox. They can be a powerful lever for change, but they're not a silver bullet. We need a whole arsenal of solutions to address the climate crisis.
Well said. So as we leave our listeners to ponder the future of carbon markets, what's the key takeaway you want them to remember from this deep dive?
I'd say it's this. Carbon markets have the potential to play a significant role in the transition to a low-carbon economy, but only if they're implemented with integrity, transparency, and a focus on, real measurable emissions reductions.
And that it's up to all of us, governments, businesses, and individuals, to ensure that these markets are used responsibly and effectively.
Couldn't have said it better myself. It's about demanding accountability, pushing for innovation, and working together to create a sustainable future.
That's a great note to end on. Thanks for joining us on this deep dive into the complex and fascinating world of carbon markets.
It's been a pleasure exploring this topic with you and our listeners. Hopefully, we've sparked some curiosity and inspired some action.
Until next time, keep diving deep and keep those brains buzzing.